Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. And today we're going to go over actually a couple different things. We're going to go over all the trades that we made today, both the closing trades in Bank of America and Lowe's, and then the adjustment that we made in EWZ. But I'm also going to cover the earnings trade that we made over the course of 9/10 and 9/11 this week. So those 2 days we made this trade, we were probably in this trade for about 2.5 hours. So I want to cover that because I didn't do a video tutorial on it because it was really just one trade each day. We didn't really have anything else. So I'm kind of throwing that in this video. So these are not new trades. Don't enter these trades in RH because these are trades we already made. But I want to go over exactly how we made money so quickly in this trade because we made about $180 on this trade. And like I said, we were in the trade for about 2.5 hours over the course of an earnings cycle. So before I get to the trades we made today on September 12th, I want to cover those two trades. So let me talk to you about a little bit about the setup, and everyone can thank, and in the comment section, make sure everyone thanks Peter, one of the premium coaching students that I have, and I've had for a long time, and I've been teaching him about earnings trades, and he's actually really good at finding some good ideas. So we were actually talking about RH on one of our coaching calls during the day, and I decided, you know what, this actually is a pretty good setup. So I made the trade, sent out the alert to everyone. So I told Peter that if he messed up and this thing went really crazy, that I'd tell everyone that, it's his fault, obviously, not my trade. But I'll take full credit for the trade now since I posted it and made the trade. Just kidding. But everyone thank Peter, obviously. So RH, which is Restoration Hardware, what we did is on 9/10, so this is the first trade where we actually opened the order on 9/10. What we did and what we usually do with earnings is we sold a far out of the money strangle around RH heading into earnings. So we all know, and I'm going to visually show you here in a second as proof, that as soon as we get into an earnings type event, implied volatility usually contracts dramatically after the event. So even if the stock makes a huge move in one direction or another, the fact that we're now past that kind of unforeseen risk event, right? That we don't know where earnings are going to be. Are they going to be higher or lower? But now that we're past that risk, implied volatility of these options are going to go down dramatically. So what you find is you find a great opportunity to just purely sell expensive options. And if you can get them far out of the money, that's actually really good. And that was the case with the Restoration Hardware. So what we did is we sold a very close contract, so the September contracts, which are very close, so we didn't go far out with this one because it's only a 1 or 2 day trade, and we sold the 95 calls and the 70 puts. So again, doing this very wide strangle on RH. Now, at the time that we entered this trade, we took in a credit by selling both sides, the 70 put and the 95 call, of about 115. Now, I'll go to the chart here for a second, and you guys can see that after earnings took place, you can see that Restoration Hardware went from 81 to the next day about 79. So not a huge move down in the stock, but definitely a drop lower in the stock. But what you can see on the graph here in this chart down below is our implied volatility chart. You can see that implied volatility went from about 60 in Restoration Hardware down to about 30 in one day. And so that quick drop in IV back down to about the 5th percentile really gave us a very, very, very quick profit. And you can see that it's been happening a number of times in Restoration Hardware where implied volatility is going to drop just right after that earnings event, regardless of the stock making a huge move or not. Because both times that it made a huge move, and you can see the last earnings cycle, the stock shot up dramatically. And even though the stock was very volatile in price action, the options for that underlying stock were actually going down in value because implied volatility is gone. We are now past this earnings event. So really, really interesting how this happens and a great opportunity to profit from that. So as soon as the market opened, pretty much right after the open on 9/11, we went back in and bought our two strangles back, the 95 call and the 70 put, for a 25-cent debit. And that left us with a $90 profit on each of those strangles. So a nice $180 profit. Again, not really being in the trade more than about 2 hours. All right, so let's go down and talk about our closing trades for today. So the first trade that we closed out of today is our Bank of America vertical call spread. So BAC has been doing really well, but this is a trade that we originally made. It was a 50-50 bet. Remember, these vertical debit spreads that we originally enter, we're paying about mid-price. We paid around $1 for this spread. I think it was like $1.01 was our actual price. But that put our break even at about 16 for Bank of America. So we really needed the stock just to trade at some point between now and October expiration above 16, and we got that, and the options now increased to a value of 145. So what we did is we sold those back to the market, took in a credit, banked a $44 profit on each of those. Really, the whole idea of why we got out of it now, even if Bank of America goes higher, we've made almost 50% of our max gain in a couple weeks. And so there's really no point to hold it another 36 days just to make the other 50% of this trade. So as far as the use of capital and how quickly we made money on this trade, it's a very, very good trade to roll off, even though we didn't quite max out our gain, because we banked a profit and we made very good money in a quick amount of time with Bank of America moving higher. So you can see here that we played Bank of America moving higher, so it did move higher well above 16, which helps. So we did stay in this trade just a little bit longer as it moved above 16, and implied volatility went up, which absolutely helps this position across the board. So we got two things that worked in our favor. We had the stock move up, which was great. That helped our spread. And we had implied volatility move up. Again, that was great, helped our spread. Really, what else do you want to do, right? At this point, if the market does exactly what you were expecting, you got to just take the trade off and bank the profit. All right, so the other trade that we close out of today is Lowe's. Lowe's was more of a hedge and conduit for Home Depot. So if you go back a couple videos, maybe about a week or two ago, what we did is we were short Home Depot, and we wanted to buy this out of the money call calendar spread on Lowe's to kind of act as a hedge against Home Depot possibly going higher. Well, Home Depot went lower. We closed that trade out for a profit, and Lowe's was actually starting to tick up higher, but just recently just really hasn't gained any ground, hasn't moved towards our short strike here at 55 for September. So for with this calendar spread, we decided, you know what, again, it was acting as a hedge. There's no point in really losing the whole thing just because we were trying to make some money out of it. So we made money on Home Depot, so we went ahead and bought back, since it's getting closer to September expiration, which is what we're concerned about with this calendar. We went ahead and, sold back to the market this calendar spread for a $27 credit and had just a $4 loss on each of those contracts. So pretty much a scratch trade. If we take a look at where Lowe's is trading right now, you can see that it did kind of have a nice little rally up, and let me just reset my styles here. It did have a nice rally up. It was starting to head towards 55, but right now we need the stock all the way up here at 55 by September expiration, and I just don't see that happening. That's going to be a huge move higher for the stock in the next kind of 5 or 6 days. So I just don't see the stock making that big of a move, and I'd rather just save some of the premium that's left in this thing to just get out of the trade with a small loss or a scratch. Okay, so let's talk about now the adjustment trade that we made in EWZ. So this has actually been really interesting. I'm not glad that the stock's moving against us, but this gives us an opportunity to then show you guys a little bit more about how we make adjustments. So if you go back to the video we did, just the last video, we added the other call side to this position. So as EWZ is heading lower, we added the call side away from it. Well, now that we've added two call sides, we have two call spreads working in our favor. What we did today is we went back in and added an additional put side. So what this does is this effectively creates a double iron condor. And I know you're like, what the heck is a double iron condor, Kirk? Well, we're going to go look at it here in a second, the profit and loss chart of it, so you guys can see what it looks like. But basically, we have this double iron condor around EWZ. Really, the whole idea that we have is that we're going to continue to take in credit, right? So today, we sold the 46.45 put spread, took in an additional 24 cents on each of those contracts. Again, taking in this massive, massive credit on EWZ, which helps move out our break-even points, move up our max risk on either ends for now. And so what we want to do is just see this thing a little bit more range bound, which I definitely think we'll see as we get towards the end of September and into October. So this is a chart here of EWZ. You can see it's obviously had a huge, huge sell-off since we entered the trade, which is okay, but now it's going to start to find, I think, some support down here. I think it's starting to get to a range where people might start buying it as bottom feeding. And emphatically, implied volatility still remains very high. It's in the 100th percentile, which means that it's basically about as high as it's been in the last year. So this gives us a great opportunity to still add to this position and sell premium. Even more so as I continue to talk and tell everyone in some of the group coachings and some of the personal coachings, this is a great example of why you still need to have dry capital available, because had we not made, or had we made, a huge investment in that original iron condor and kind of maxed out our portfolio, we wouldn't have had an opportunity to add some of these positions to the trade. So it's a really, really good opportunity to add positions to this trade because implied volatility has just gotten better. So here is a look at our double iron condor in EWZ, and you can see it's just got, almost two pyramid shapes to it. So it's got the iron condor, which was the original, down here at 46.45 and out here at 58.59. And what we did is we added these two inner sides to this condor, so made kind of a higher hump right here in the middle. Now, by adding this kind of middle section to the iron condor, what this did is it moved up our break-evens on this side and it moved up our max loss. So right now, with the stock trading over here, our max loss is actually fairly low compared to our original spread if this thing had gone completely against us. So what we're going to do at this point is just kind of monitor this. I definitely think that this thing will come back into this range, so I think it will definitely have a little bit of a bounce, and we've got a lot of time between now and October, but it's becoming a very big position, which is okay. And if it does continue moving lower, as we talked about in one of the group coaching webinars, then what we're going to do is we're just going to keep rolling down these put sides that we have now and take in more credit. So if we continue to roll down those sides, that will continue to move this break-even point out further, therefore adjusting for the fact that the stock continues to move lower. As far as where this position is today and where we entered it, let me just take off this position right here. So where we entered and added this position today, we added the 49.48 call spread or put spread below the market. So that effectively gave us a much higher hump, but it reduced our overall loss down here. So again, I like this position because I still feel like the stock can rally higher. I've still got a lot of opportunity here. We're making a lot of money on this side of the trade. And so what we want to do is possibly roll down this side next week. But I want to give the stock a little bit of time to possibly make it bounce higher. Like I said, in looking at the chart, I mean, it's had 5 or 6 days of just absolute tear. And you got to feel like somebody's going to come in here and start bottom feeding just a little bit. So as always, I hope you guys really enjoy these videos. If you have any comments or questions about the trades that we made, please ask them right below here in the comment section. I'll get back to all of those tonight or Monday before the open or sometime over the weekend, and happy trading.